Hello everyone and welcome back to the Accounting Desk. In today's lecture, we will discuss IFRS 5 non-current assets held for sale and discontinued operations. Sometimes companies decide to sell assets or entire business segments instead of continuing to use them in operations. When this happens, the accounting treatment changes because the asset will be recovered through sale rather than used. To ensure consistent financial reporting in such situations, the International Accounting Standards Board issued IFRS 5. In this lecture, we will cover one objective of IFRS 5, 2. Scope of the Standard 3. Criteria for classification as held for sale 4. Measurement rules 5. Presentation in financial statements 6. Discontinued operations 7. Disclosure requirements 8. The objective of IFRS 5 is to specify the accounting treatment for non-current assets held for sale and discontinued operations. According to the IFRS Foundation Standard, IFRS 5 requires 1. Assets held for sale to be measured at the lower of carrying amount and fair value less costs to sell. 2. Such assets to be presented separately in the statement of financial position. 3. Results of discontinued operations to be presented separately in the income statement. These requirements help users understand which parts of the business will continue and which parts are being disposed of. IFRS 5 applies to non-current assets or disposal groups that are classified as held for sale. A disposal group refers to a group of assets and liabilities that will be disposed of together. However, certain assets are excluded from IFRS 5 measurement rules because they have their own measurement standards. Examples include IS 12 income taxes, IS 19 employee benefits, IS 41 agriculture. These assets continue to be measured according to their respective standards. A non-current asset is classified as held for sale when its carrying amount will be recovered primarily through sale rather than continued use. IFRS 5 sets several conditions for this classification. 1. The asset must be available for immediate sale in its present condition. 2. Management must be committed to a plan to sell the asset. 3. The sale must be highly probable. 4. The asset must be actively marketed for sale. 5. The sale is expected to be completed within 1 year. If these criteria are not met, the asset cannot be classified as held for sale. Once an asset is classified as held for sale, IFRS 5 requires it to be measured at lower of carrying amount fair value less costs to sell. This means that if the fair value minus selling costs is lower, the company must recognize an impairment loss. Relevant impairment guidance is connected with EAS 36 impairment of assets. Another important rule is that depreciation stops once the asset is classified as held for sale. This is because the asset will no longer be used to generate economic benefits through operations. IFRS 5 requires separate presentation in financial statements. Assets classified as held for sale must be shown separately in the statement of financial position. Similarly, liabilities related to the disposal group must also be presented separately. This separate presentation allows investors to clearly identify assets that the company plans to dispose of. A discontinued operation is a component of an entity that has been disposed of or is classified as held for sale. Examples include disposal of a major business line, sale of a geographical business segment, disposal of a subsidiary. The results of discontinued operations must be presented separately in the income statement. This presentation helps users distinguish between continuing operations and operations that will no longer exist in the future. Suppose a company owns a building used for operations.